The world of investing and trading has grown exponentially during the pandemic, with more than 10 million new brokerage accounts opened by individuals in 2020 alone. How can you start in trading and stocks? Joining us now to share more is trader, investor, and YouTuber Thomas Carvo. Welcome, Thomas. Thank you so much for joining us today.
Awesome. Thanks for having me.
Of course. So let's start with the basics. In case people are watching and they aren't familiar, what is stock and what does it mean to own stock?
So, just keeping it very simple, essentially what it is you're owning a small fraction or a small piece of a company. So, if you like a company, for example, let's say Apple, you have the iPhone, you use their products, you like the company, you believe in Apple long term, you can get a piece. You can buy a share of Apple, and these days actually you can actually own, a fraction of a share depending on certain brokers, which we can talk about in a little bit, but you get a piece of that company. So you can kind of stay along for the ride through the growth and have a share in a sense.
Thank you for that, Thomas. And COVID-19 has definitely impacted the stock market. In the beginning of the pandemic, it looked like things were dropping, but now they're back up. Can you tell us a little bit about the impact that the pandemic has had
Yeah,
on the stock market?
it's been crazy. Back at the beginning of the pandemic, there were so many questions, so much uncertainty of, what's going to happen. All these airline stocks, you had, all these travel related stocks that didn't know, what was going to happen because of the virus and everything. And so a lot of stocks lost more than half their value in a very quick period of time, about a month, less than a month for a lot of stocks. And the markets in general, were down about 30% or so at some of the lows, which is kind of crazy. If you average out roughly over the past like 30 years or so, you see about a 10% growth on average across the
Mhm.
S&P 500, for example. And so, to see 30% down in about a month is crazy. That was a crazy crash. But since then, stuff has rebounded, dramatically, and we've seen stimulus, and we can talk a little bit about the impacts of that too. But that has really kind of fueled the fire, and people have come on to say, hey, this pandemic, as bad as it was, market's forward looking, and so now everyone's looking ahead.
Right. And a lot of folks seem to have taken advantage of the fact that stocks did drop and things became cheaper for them to access. So, can we talk about just about some of the factors leading to the growth among new investors? Is it the stimulus check, remote work? What are some of those things that are impacting the growth in stock market?
Yeah, I think it's a bit of both. I mean, you saw that when people were home now, especially, even if you were, even a college student, if you were someone who was in the workforce and now you're stuck at home, whether you're working from home, and those who unfortunately lost their jobs, you had to kind of say, okay, what can I do with my time? Either I could pick up something on the side. Many people picked up trading and investing on the side, and that turned into more than they thought, at least the past year. Um, and so that was big, and especially the stimulus too. That multiple rounds of stimulus checks. At least I would say the first check, I think, was probably the most. We saw the most impact. It seemed like, at least, across the market and across a lot of people sharing returns, and how well they did, at least with investing their stimulus check into, let's say, Tesla stock, or any stock of their choice that they like at the time. It seemed like almost everything has gone up since those lows. So it's been a crazy time for sure.
I have to mention that I appreciate you as a YouTuber, as someone who's sharing content with other folks who may not know about this subject matter, because a lot of times the stock market can be non-inclusive to folks who don't know about it. Can and should anyone invest in stocks, Thomas? What amount should people start with? What do you say?
Yeah, yes and no. I mean, so I believe at least everyone should at least have some money at least in the markets. I think it's a great way to compound at least that money over time. Now it depends really when it comes down to this, because most people, the statistics are actually show that about 90% of people who look to kind of actively trade, day trade, and kind of short-term trade, they're actually going to lose money. And so for most people, it's not the best idea to try to start day trading and trying to make money quickly, right? It's best to actually stack your money away in either to long-term investments, so stocks or companies you believe for the long term. Like I said, Apple before, for example, could be a stock that you could hold for the rest of your life potentially, right? um, and that way you can compound that money over time. So I would say that you don't want to be going in with more money than you can afford to lose initially. And so the best way to kind of go about it would be, let's say you make a certain salary per month. If you can say X number of dollars every month, I can afford to invest and I can put that money aside. That money can compound. And if you average out 10% per year, you can do the math on how old you are, and when you retire, or when you want to potentially take that money out, how much more money you'll have down the road. So that's probably the best approach that most people can go about is kind of think about the long game. Don't think about the short term game. And that's probably the best way I would say you should go about it. But without money with money you can afford to lose or money you can afford to put away, at least for now, that you don't need for expenses.
Got it. Great advice. Thank you. And for beginners, they may be intimidated by charts and numbers when they see, stocks. They don't know what's going on. What would you recommend as the best and most user-friendly apps to begin trading with?
Yeah, there's a bunch of apps these days, and so it's kind of cool because Robinhood, for example, is one of those apps these days. Now, there's been kind of some backlash at Robinhood, what happened about a month or 2 months ago, and how they stopped trading on certain stocks. I think a lot of that was overblown to a degree in the investing community, but for the average person, a stock or an app like Robinhood, or nowadays there's even apps like, for example, Webull, and there's one called Public. Those are some apps that make it very, very simple. Webull, I would say, is more for like someone who's a little more active. It's a little more complicated in terms of there's more there for you to use in terms of features. So if you want that, you have the option to. But then you can look to kind of like your bigger name stock brokers these days. You can go to like, for example, a Charles Schwab, or you can go to Fidelity, or even TD Ameritrade.
Mhm.
They all have, all these brokers, they have apps. They're not going to be as user friendly, for example, as like a Robinhood, but at least some people kind of feel like they feel more comfortable saying, hey, that company's been around for a long time. I'm going to use them. So it really comes down to kind of what you're comfortable with. And there's no harm in trying, in downloading three different apps and saying, hey, this app's cool. I like this one. I'm going to stick with this one. Then you can deposit more money into it as you see fit. So that's kind of how I would go about it. Everyone's going to be different when it comes down to it, but there's a lot out there.
Right. And the next thing I wanted to ask is, what are penny stocks? And would you suggest them? Would you say that these are the best bet for newcomers with limited resources to invest?
So they're essentially, think of them as speculative stocks. So a lot of these penny stocks, there's different classifications and there's different types of markets. But for at least for what most people kind of will think of penny stocks and what they'll see penny stock as, low price stocks with a small number of shares available to the public, which they call the float. So I talk about it a lot in videos. The stock has a low float, which means it's really volatile. That's all it really means. And so when you have a stock that's at a price point under, let's say, $5, that has a float of, let's say, under 100 million shares available, you know somebody with a lot of money can come in and buy a large portion of that float, or the amount of shares that's publicly available, and that can move that price drastically, right? And especially these days, a lot of these penny stocks, what they'll do is these companies, they'll put out a press release, and all of a sudden everybody's churning in, everyone's buying, 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 because that press release reads really well. And so these stocks are extremely volatile, but they're definitely not for everybody. There's a way to trade them that can be profitable, and that can, over time, right, that you can learn how to play it. But for most people, it seemed like, I would say, even the past year or so, ever since the pandemic, anything you buy would go up, over time. But now we're seeing kind of the downside of that, the backside of that, and we're seeing the resulting, a lot of these stocks are now dropping. So it's definitely not for everybody.
Thomas, you just mentioned speculating. Can you help us understand the difference between investing and speculating? And are stocks always about taking risks with your money?
Yeah, so there's always going to be a risk, no matter what, because we even saw what happened with Tesla. I think was in the news yesterday how there was a crash, a fatal crash, and you never know what could happen. Any news, anytime could come out about a company, about a CEO, even if it's Apple, even if it's any stock that you might like, right? So when that's the case, you're always taking a risk. But there's kind of situations where you can get yourself into higher risk and lower risk. Now, the way that I like to do things is I'm more technical, at least in terms of my approach. And so I like to be buying things that are already down, that are already, have fallen off, that have less attention. So that's how I minimize kind of my risk. But when it comes down to kind of investing or speculating, you can be investing in a company that you have everything in front of you, right? This company. Obviously, there's always risk, but you can be looking at, hey, there's everything's in front of us. This company's been around for a long time. I'm going to invest in them. Then you can go more the speculative route, which I guess could be more the penny stock route, where, hey, this company, they have some really cool tech, but it hasn't been proven yet. It hasn't hit the market yet. Or for example, nowadays, all these electric vehicle companies, there's a lot of companies out there that haven't actually got their cars, like people aren't driving the cars, they're not in production yet. So that's more speculative. where hey, that we know that sector is up and coming. We know that's going to be around for a long time. We know that's the future. But that specific company, we don't know if their cars are actually going to be good. And so that's kind of where you can draw the line between speculating and investing. Like Tesla, you can see it. People have the cars, maybe people have, if you own the vehicle, you can at least that's more of an investing approach. Speculating would be, for example, a stock where another stock called Fisker, where they don't have production yet, but they're an EV company. That's more of a speculation. You can buy their stock, but we don't have a product physically in hand yet. So that's where the difference I see lies.
Gotcha. Thank you for breaking that down. And it does take a lot of research either way, whichever route you're going to
Mhm.
take. No. So the next hot thing, the hot item, but the hot button item in the news is cryptocurrency. So Dogecoin or Dogecoin, I'm not sure how to pronounce it, but what is it?
I think Dogecoin, yeah.
Dogecoin. It has a dog on it. um, what is Dogecoin, and is it a smart investment or simply just a joke?
So it actually is a cryptocurrency, but it was created, I believe, in 2013 as quite literally a joke. The issue that you have with Dogecoin, where the difference lies, the main difference between Dogecoin and, like, for example, Bitcoin, there is a set kind of supply. So at any time now, there's Bitcoin halving, and there's more complicated ways to go into things. And there's Bitcoin mining that companies and people can do. But there's only ever going to be 21 million Bitcoin ever in existence. Now, Dogecoin can have an unlimited supply, so that can continue to be mined and mined and mined, and essentially you can dilute the supply to no end. So that's the difference. And it's more so a joke, and it's more so something that definitely would be, it's something that if you threw in a few dollars that you had for fun, that's all I would recommend, just to kind of be a part of things, especially how we saw even with GameStop a couple months ago. Definitely, once it started, the price started pushing up over $100. That was not something that you realistically wanted to be in long term, potentially, right? For most people, valuation wise, if you start diving deeper into their numbers and their stock price, it didn't make sense. And Dogecoin, I think, kind of seen that same in kind of that same light. It just doesn't make sense long term. But it doesn't mean that it can't go up to a dollar. It's sitting at like 35 cents or something like that now. It doesn't mean it can't go to a dollar or more in the short term if there's enough hype and there's enough speculation behind it right now.
Right. Well, thank you so much, Thomas, for your time today. Before we go, how can people stay in touch and follow you and your YouTube account?
Yeah, so the best way is just on YouTube. It's just Thomas Carvo is my channel. And under there, I have links to other resources and things like that. So that's the best way. I'm posting there pretty much every single day. So that's the best play. And there's tons of videos already on the channel and playlists I would recommend for a lot of questions to go back through, because that's where I keep everything.
Thank you again. We're taking a quick
Yep.
break here on Open. We'll be right back.